All right, so I'm hoping everybody can see my screen here. Let's see here. Let's talk about credit scores, credit reports. It's an interesting topic. Of course, some people like the system, some people don't. Full disclosure, I did not design this. Nobody contacted me for my opinion on how credit scores and reports work. So this isn't my system to work through. I'm just going to let you guys know how this works, how this game is played, this wonderful game of credit scores. So I will just get started here. What is a credit score? How does it work? All that good stuff. It is basically a measurement of risk. How likely are you to basically make your payments? On time, not on time? General ranges on that range between 300 up to 850. Now, the higher the credit score, the more opportunities you have that come your way. If you have a little bit of a lower credit score, so for instance, if your credit score is below 600, you are considered a higher risk to lenders. You're probably going to pay a higher interest rate if you get approved for a loan, or depending upon the credit score and also how your payment history has been or the credit report reads, you may get turned down for that loan. So we want to try and avoid that at all costs. So if we can get folks up above that 720 mark, it's considered a low risk to lenders. You're in good financial health. You're probably going to get approved for that loan that you're looking for. So what is it used for? Credit scores are used for many different things. We obviously all know that credit scores are used by creditors, so banks, credit unions, credit card companies. We all look at them to approve a loan. Approve a loan and what kind of interest rate are we going to have to apply to that loan? How long of a term can you go? Maybe your credit score isn't as high that you can have a longer term loan. It might have to be a shorter term loan, which of course affects the monthly payments. Insurance companies are also starting to look and use credit reports to determine premiums and so forth. And so there's been some studies done in the past that typically show those that have a little higher credit scores typically will be more defensive drivers. So maybe they have less tickets, maybe they have less accidents that come their way. So insurance companies are using it. Employers are starting to also look at credit scores. So it's again kind of going to those studies that are being done. Folks that have higher credit scores tend to, and I shouldn't say this all the time, but tend to have are more reliability factors for employers. So they're showing up on time, they're giving 100% during the day, they're going home, they're able to take on additional work or maybe help a coworker, something along those lines. Those folks also tend to have higher credit scores. Now, the other thing I don't have on this screen is going to be landlords. Landlords are starting to look at credit scores as well. They're looking to see how you're paying your other bills, because obviously with a landlord situation, especially if it's an individual person that has this house that you're renting or this apartment that you're renting, they want to make sure that they get paid from you in order to pay their bills. So they might be starting to look at credit scores when you're renting somewhere. This is my favorite little slide. I'm a very visual person, and I think a lot of people are. And this helps to break down what goes into a credit score. How does it work? What happens with it? And so 35% of a payment history, 35% of your credit score, I should say, comes from your payment history. So are you paying your bills? Are you paying them on time? That's the biggest chunk of your credit score. So what I tell everybody is if that's the only thing that you remember and that you take away from this session, you'll set yourself up for a decent credit score. The next larger amount is that 30%. That is amounts owed. So when we think of amounts owed, think of more towards like a credit card. Credit card you can use, you can pay off, you can use, and that balance goes up and down all the time. What you want to keep in mind is that the closer you get to your credit limit, for example, if your credit limit is $1,000 and you have charged $1,000 on your credit score, you are not controlling that amount owed. Now, if you are charging it because it's an emergency and you pay it off right away, that's a little different. But if you're carrying a very high balance month over month over month, it's not going to give you the most points in that category, in that little category, the purple category. Now, if you were to keep 50% or ideally 30% of whatever your limit is. So again, if we go back to the $1,000 example on a credit card, I can charge up to 1,000, but maybe I only charge up to 500, or I only, in best circumstance, I only charge $300. That's 30%. I'm actually going to totally take advantage of all the points in that one little category towards my credit score. So we want to continue to control those balances, especially on credit cards. The next category, and that's going to be that darker blue section, is going to be the length of credit history. It's about 15% is how long you have accounts. Now, this builds over time. So when I work with 18-year-olds that just turned 18, they're not going to have a credit history. They have nothing out there, typically speaking, that they've been able to prove that they can make payments and so forth. It just takes, could take a couple of years, depending upon what they have out there. It also goes for people that maybe have had some issues in the past with their credit scores and they're starting over. And gosh, you know what? I'm in my mid 40s and I had a really bad credit score 10 years ago and I paid everything off. Where is it at right now? Potentially it could be at zero. If there's nothing out there funneling a credit score or pushing for a credit score, you might have a credit score of zero. But the nice thing is with that is that you get a fresh new start. It's going to take some time, but we can help you with that. The next two, let's go with 10% the new credit. So that's that orange category. This one is kind of an interesting one because I would think from looking at this little graph that, gosh, some new credit would be a good thing. But we want to be careful with that. And as we all know, as we go shopping and we can go to different stores and we go up to the counters and we bring all of our items that we're purchasing, sometimes what we hear from the cashier is, do you have a rewards card? Do you have our credit card? Would you like to save a certain percentage? And sometimes it's really tempting to want to get that 30% off or 40% off or 25% off to open a credit card. But we have to be very careful with that because what it does is that it opens new credit, and the more new credit we have can take some points away. So we want to control how many times we're opening new accounts. So I highly do not recommend going to the Mall of America and opening a credit card at every store that you go into just to get a 10 or 15 or maybe 5% discount. Because the amount of interest that you're going to pay on that credit card, if you do not pay it off in full, is going to far exceed that discount that you had. So sometimes if you have one credit card, you might just want to use that one credit card and not open a brand new one just to get the discount. So we want to be very, very careful with that. And then the next portion is types of credit used. So we want to we want to diversify a little bit. It's kind of like if anybody out there does investing and maybe you don't have everything in one location or in one type of investment, kind of same thing here. We don't want to have everything be just credit cards or just personal loans. Maybe we want a little mixture of each. So maybe we have a credit card, maybe we have an auto loan, maybe we have a home loan. Those are different types of products, and therefore it kind of can diversify what's out on our credit report as well. All right, so what are some things that are not in a credit score? So there's lots of things that don't go into it. Race, color, religion, national origin, sex, marital status have absolutely no bearing on our credit scores or on our credit reports. It does not show up anywhere. They don't look at that when doing a scoring system. Same thing with age. Now you might say, Nicole, wait a minute, you just said if I was 18 or whatever age, it could count against me. It can, but keep in mind that the time that our credits start when we become of legal age, and that is as of the age of 18, or at the times of when we're having credit out there. Now, they don't necessarily care that somebody is 18 or that somebody else might be in their 40s or somebody else might be in their 70s. They're not so concerned about the age itself. It's just what do we do to build that credit score with how much time we have or how we're building that time frame. Bullet point number 3 and number 4 are big misconceptions. So, how much money you make. I hear a lot as I travel and I do financial education. I hear a lot of, gosh, Nicole, if I just make 150 a year, if I just make 200 a year, if I just make whatever a year, my credit score is going to be fantastic. Well, maybe not. I've worked with people that are very affluent, have lots of money. They make a lot of money, I should say. But sometimes what happens is that they spend a lot of money and their credit scores sometimes tend to suffer because maybe they can't make the monthly payments because they have a lot more monthly payments. But I've also worked with folks that are living at a very low income range. They budget every single bill, they know where every single penny goes, and they have fantastic credit scores. So it really has nothing to do with how much you make. It's all in, we've all heard the term, living within our means, but it's also all in how we're budgeting all of our accounts and all of our bills and all of our expenses out there. And same thing with occupation and employer information. It does not matter if you're like Nicole and you work for Mid-Minnesota Federal Credit Union, or if my husband is a mechanic, or, it doesn't matter what job, occupation that you work in. That does actually not play into your credit score. Same thing with where you live. You decide you want to stay here in Minnesota, you want to move to Florida, you want to move to California. The credit system, the credit reporting and credit rating system works all over the US the same exact way. So if you travel across state lines, wonderful, and you're moving over there, wonderful. If you happen to move across, borders, so if you want to move up to Canada, you want to move to Mexico, you want to move overseas, you would want to double check and see if they have a credit scoring system and how it works. I am not familiar with outside of the US, but I'm sure a little research would probably get you that information as well. So, Nicole, how do I build a strong credit score? Well, kind of like we talked with that little circle graph, my little wheel of fun, I call it, is paying your bills, paying them on time. And I know that that's easier said than done. But if you are struggling with that and you're noticing that your credit score is staying maybe not where you would want it, come talk to us. Come talk to Mid-Minnesota. We have a lot of folks that we have a lot of experts, I should say, a lot of wonderful people in our branches that will sit down. They will talk through how things can go, what we can change. Are there some systems or budgeting tools or resources that we can get you to start being able to get you to pay your bills on time? Don't go to the mall. Don't go to every single store and apply for all that credit. It sounds very, very, very tempting. I've been there, trust me. Back in the day, that was something that you just did. But now we kind of know the adverse effects of opening too many credit cards, and having too much credit out there. Maintaining some older accounts. So maybe somebody on this webinar, or this Zoom call, I should say, has an account that they've had since 1983. They might be existing out there. And sometimes you're wondering, should I keep that account open? Should I close it? What should I do? If you've maintained having a good payment history and you've been a good card for you, you've paid it off, you've paid it down, however you want to look at that, might as well keep it. There's nothing wrong with keeping an account open for a long period of time. If it's one where, gosh, you know what, I struggled to make payments, I had a bad situation, this one is just not helping my credit score, you may want to think about closing it. Keep in mind, if you do close it, your credit score will dip, but it will eventually come back up as well. Pay down those credit balances, pay more than the minimum. We could do a whole nother conversation on credit cards. Credit cards can can be a good thing. They can hurt sometimes. But if we pay more than the minimums, and we get those balances paid down, paid off, it will continue to keep a good credit score for us on that one card. All right, and then, gosh, you know what? If I'm 18, if I'm in my mid 40s or I'm in my late 70s, and I need to get some credit. Maybe I haven't had credit. Maybe I had some issues in the past where I haven't had credit for a while, and I need to rebuild my credit score. What should I do? Nicole, how do I do that? Well, I'm going to actually talk to you guys about a couple of different products that we have at Minnesota that can help rebuild credit, can help sometimes start credit. The first one is that savings secure loan. And what that is if you have money in a savings account and you come in and you're like, Nicole, I just need to start credit. I just need to get something out there. What can I do? Maybe let's just say it's $500 in a savings account. One suggestion I might make is, hey, let's look at using that $500 as collateral, and then I'm going to give you a loan for $500. So you're actually not out any money. And as you pay down on this loan, let's just say from 500 to 400, the amount I'm holding as collateral on your savings account goes from 500 to 400. And as you're paying the loan off, the amount that I'm holding as collateral also decreases. And as soon as this loan is paid off, I hold nothing as collateral. And maybe let's just say it's a 6 month or a 1 year loan term, depending on the loan amount. You've got 6 to 12 months worth of on-time monthly payments, which is going to help your credit score. Now, it's not going to have you jump from 0 to 850. So I want to make sure it's realistic on that, but it might jump from 0 to maybe you're in the mid 600s. And then maybe we look to do something else and we go from 600 to 700 and then, continue the process in 700 to 750. The other one that we have is the credit builder loan. Now that one is wonderful. And what that does is that we will give you a loan. Let's just say it's $1,000. We put that money into a savings account for you. And as you're paying on the loan, the amount, again, that we're holding as collateral decreases. So if you end up paying off that loan, and again, $1,000, you end up paying that loan off, you don't touch any money in the savings account. Immediately when that loan is paid off, you have $1,000 emergency fund. That's huge. A lot of people right now do not have emergency funds. When the tire blows or the water heater goes out or the air conditioning, all of those things happen. Where does that money come from? We could go into a whole different topic on that, but that's another way to really build credit. And actually, it's kind of a win-win type of situation because you'd have an emergency fund at the end. All right, I'm actually going to flip through that. The next one that I want to go into here is how do I keep track of my credit? What can I do to look at it? Now, there's a couple different things you could do. One of them is going to be annualcreditreport.com. You could go to annualcreditreport.com. You can look at your credit report. It does not show the score, but you can look at your credit report and you can kind of go through there and see, okay, what's out there? If there's something out there from 4, 5, 6 years ago that you either forgot about, it's been a while since they've contacted you, whatever it happens to be, and you want to get things cleaned up, that's the perfect time to be able to do that. Go out there, look at it. Now, I will also be honest with credit reports, it can be a little confusing. There's a lot of information that's kind of condensed into, a couple of pages. So if you're not sure what you're looking at or trying to decode it in a way, again, feel free to contact us. We would love to sit down with you, go through it just to make you aware of what a credit report looks like, what's out there, that's showing up in your name. And we can kind of show you if there's something on there that is old and we need to get it taken care of. We can help get you connected with whatever entity that is and hopefully get that cleared up as soon as possible. Now, there's 3 credit bureaus. Okay, there's Experian, there's Equifax, and TransUnion. Now, I will be honest, with each one of those, they have their own scoring system, their own algorithm. So you might have a credit report from all 3 of them, and your score could be different. You could have a score of, let's just say, 800 with TransUnion and 750 with Equifax and 700 with Experian. And that's not uncommon. So we want everybody to be aware of that, that if you pull it through one area and you're in Minnesota, you're looking to get a loan with us, and we pull it through another area or another bureau, they're going to be off a little bit. And the reason for that is not every entity reports to all three credit bureaus. So not only do they do their own algorithms, but if I'm just a individual renter, I'm sorry, I shouldn't even say a renter. I should say let's just say I'm a small town bank and I gave a loan to somebody and I only report the payment history to Equifax. But Experian and TransUnion know nothing about this loan. So those two bureaus are not going to have any information, any scoring on this one loan. So sometimes that's where we can see a little difference on credit scores as well. So just to make everybody aware of that. Now, the other thing I wanted to talk about too is what happens when somebody looks at my credit score. So if I want to go out there and I want to look at my credit score, does it cost me any points? If I go to the mall and I opened up a new credit report, excuse me, a new credit card, does that take away any points? So there are what we call hard credit pulls and soft credit pulls. So if my employer, I might have an employer that pulls a credit report before I start working there. That is going to be a soft pull. So that's not going to pull points away. If I'm looking to get a loan, a credit card, a home loan, things of that nature, where I'm looking to take on more debt, more credit, that is going to be a hard pull. And that will take some points away from your credit score. So if you are looking to open up a new loan, a new credit card, whatever it happens to be, just be aware that you might lose a few points because of that credit pull. If you go out there and you want to look at your credit score or you contact the credit bureaus individually to get your credit report or credit scores, that is also a soft pull. So if your insurance company, if your employer, if your landlord, those do not pull the points away. So that's kind of a nice little benefit there. But it's good to know that if you want to get a credit card or get a loan, you might have a little points being taken off because of that reason. So that's another reason we don't want to go to the mall and open up 5 different credit cards everywhere. All right, so that's kind of at the end of my PowerPoint here. And so I'm actually going to go ahead and stop sharing my screen and kind of go back here. All right. I'm going to just type in the chat here to see if anybody has any questions. And if we have any questions, we'll get those answered. If not, we can give everybody their evening back. I know the summer evenings go fast, and we are still sitting in the longer days of the year, but pretty soon that's going to switch. So we want to keep everybody or give everybody as much time as possible as we go through the evening. Let's see here. And I am not seeing any questions. All right, so with that, I will give everybody their evening back. I appreciate you logging on and coming to join us. If you have any questions, feel free to contact us. Feel free to come to our website. It's mmfcu.org. There's lots of information out there as well. You're welcome to email me as well. I will probably be sending out to all the participants that registered a link to where they can view this video as well if anybody missed it. And if there's any questions, you'll have my email and you can connect with me as well. So everybody have a fantastic evening. Enjoy your June, and we'll see you all. We will not have any sessions next month, but we will be back again in August. Have a great evening, everybody.